Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency market update for Thursday, October the 8th. Before we jump into the content for this video, please do me a huge favor, hit that thumbs up button, make sure you subscribe to the channel, and of course, if you haven't already, make sure you check the description for a link where you can join the Patreon. Not only does that help to support the channel, it gives you access to more frequent updates as well. So I want to talk a lot about Bitcoin today. We're going to kind of drill into Bitcoin, probably avoid most of the other charts. And I want to talk about the fact that these macro movements that a lot of people, get so focused on, they really don't mean anything to most traders. Okay, so if you take a trader like me, I've talked about this in the past, I am a day trader. I will take position trades occasionally. I will take swing trades occasionally, but I make my bread and butter income from day trading. The reason that I prefer day trading over swing trades and over position trades is because it has it's less susceptible to outside events. So for example, today Square came out and said they were investing $50 million in the Bitcoin. And do I think that news moves the market? I think people's reaction to the news can move the market, right? So you have the market that pumped up $300 or $400 today. But the funny thing is people will say, well, it was news, and there's no way you could have seen that coming. There's no way that you could have played that. The charts predict what's happening. The charts predict what's coming. And the smaller the time frame, to a certain extent, right, the more accurate the entry. So I'm going to give you an example of this. And I did this a couple days ago on social media, so I should probably talk about that example as well. I don't think I have it saved. Maybe I put it on my Patreon, so I'll check real quick. Okay, great. So I did have this on Patreon, so I'll talk about this and then I'll show you the example of how you could have caught that Square move this morning. So a couple days ago, there was some news that came out that apparently Google Cloud was going to be some kind of block produce, something with EOS. I don't really know that much about EOS, but something about their block, right? About their blockchain. So, I should know more about EOS because I still hold EOS from 2017, but I don't. Sorry. But long story short, people were super excited because EOS suddenly had this big 20% pump. And they said, well, a lot of people believe there's no way you could have got in on that. It was just, luck. Guys, it's never, I shouldn't say never. It's rarely luck. It's rarely the news. It's usually the charts are predicting it ahead of time. So on the right-hand side, this is the quote-unquote Z pump of 2019. This is when the president of China came out, or whatever he's called. I don't know his title, but the leader of China came out and said something about, I don't even remember what he said now, something positive about blockchain, right? Everybody's like, oh, China's going to, invest in Bitcoin. So it had this big 30-40% pump. But if you look, there was this long running bullish divergence on the daily chart. And in fact, I had posted on Twitter right before this happened that if you were a bear, you better be careful because a pump was incoming. Now, unfortunately for me, I didn't think the pump was going to be this big, and I did FOMO into a short position, and I ended up losing a bunch of money. If you've been watching the channel a long time, you'll remember that I had a really, really bad day, the worst day trading that I've had in over 2 years. But it's not because I didn't see the pump coming. I saw the pump, but then I was trying to short it down around $8,000, right? And it just blew right through that. But if you look at the left-hand side, this is the EOS chart. This is the Google Cloud news, right? But look here, you had the same type of thing going on. This was happened to be a weekly chart. A weekly chart is going to be even more, pertinent than a daily chart. If you're looking at a weekly chart and you've got divergence, that's a sign that something's got to give. That rubber band is being stretched back further and further. Eventually, it's going to pop. And that's what happened here. You had the divergence forming and it finally popped. So if you look at today's chart, this is an hourly chart. And I'm not going to go super deep into all the different reasons that this would have made sense to take this trade, but I am going to go into two reasons that are very, very easy to spot. Anybody can spot them, and you can kind of put this in your bag of tricks. So this was the trend line, the upward sloping trend line that I had been watching on the hourly chart, right? It goes back to September 23rd. I was waiting for it to come down to this line. This is part of the reason that I shorted Bitcoin before I went to bed last night. I shorted it up around 10.6 something. I'll look real quick and tell you. It was 10.656 that I went short. Right around the daily close yesterday, right? And then, of course, it dumped down about 1%. Now, unfortunately for me, I was going to bed. I didn't feel good, and so I put a super tight trailing stop loss on that, and my trailing stop did get hit. It got hit at 10.623, so that was a bummer. That was about $30, $35 profit per Bitcoin, but after fees, it was very small profit. So it wasn't, that big of a deal. And when this happened, I was sleeping, but check this out. All right. So this happened around 4 o'clock in the morning, my time, or 5 o'clock in the morning, my time. It was a 4 a.m. candle. Came down, slammed into this trend line. So that's one reason that I might want to go long. And then the other thing it did was it put in this spinning top candle. You'll often find this candle, this type of candle, at the tops and the bottoms of moves. And so what I like to do on these is I like to long or short them depending on where the move is at, right? If you're sitting on support and you get one of these, I like to long it. So I'll do something like this. I'll long it and then I'll pull my stop loss down just under the bottom of the tail. So it looks like this. So like a 0.4% stop loss and a 0.8% profit target. Okay. Now, this is before the news broke about Square and all that kind of stuff. There's the trade, right? You don't need to know about the news. All you need to know is, look here, we've got a reason to take this trade in the chart. And then once you get into that trade, once the profit target is hit, what I like to do is typically set like a 0.5% trailing stop loss. And in this case, that would have went all the way up to the top and then finally pulled back about a 0.5%, right? So this trade would have got closed right there. So right at 3% profit after fees. Now here's why, number one, you just saw how you could have taken that trade, capitalized on the Square news without even knowing about the Square news. But number two, here's why I don't care about the macro movements. Here's why I'm a day trader. So the way this works, I'm going to pull up an example for you. Let's say that a person had a $10,000 trade fund, okay? And that's just a good round number for easy math. And let's say that that person was okay risking 3% per trade, meaning that they would risk $300 per trade, okay? And we're gonna say that that $300 is after fees, not before fees, but including fees. So if your fee is 0.15%, which is 0.075% times 2, because you've got to pay the fee when you open it, pay the fee when you close it, right? This is how this trade would have looked. $10,563.18 entry times 0.15% equals $15.84 per Bitcoin in fees, right? And then you got a $42 stop loss. So 42 plus 1584. That's your loss per Bitcoin if you're wrong. So $300 divided by that gives you a trade size of 5.18 Bitcoin. So even though this person only has a $10,000 trade fund, they can use 5x leverage, or a little over 5x, get a little over a 5 Bitcoin trade and still only be risking $300, right? And then the way this trade works out, 5.18 times 10 grand, right, ends up being right at a $54,000 trade. And on this trade, 3% net profit after fees ends up being $1,643.65, or about 16% of their trade fund. That's about a 16% profit, 16.43% profit on one trade based on an hourly chart. Why do I need to care about a weekly chart or a monthly chart or any of that stuff when it comes to my day-to-day income? The answer is I don't. All of that stuff, all of the predictions for the weekly and the macro, that's all great from an investor point of view. That's all great for people that are trying to buy Bitcoin and hold it long term, or looking to buy Bitcoin and hold it long term, which I do, right? I still have a little bit of Bitcoin and I would like to buy more if the price was right and the structure was right and all that kind of stuff. But I'm not going to FOMO into it because my day-to-day income doesn't depend on any of that, right? How many of these types of trades a month do you think a person needs to make a full-time income? And then let's change the numbers a little bit. Let's say you're a professional trader, that you're not doing this as a hobby, and let's say that maybe you got let's say $100,000 trade fund, right? Okay, suddenly all this changes because now your risk per trade goes up to 3,000. Now instead of doing 5 Bitcoin, you're doing 50 Bitcoin, right? Because your trade fund is 10 times as big. And now instead of doing a $54,000 trade, it becomes a 540, or well, actually becomes a $547,000 trade. And now your profit, instead of being $1,643, becomes $16,000 for whatever that was, right? Looks something like this. Now this person, this trader that's trading with $100,000 and using 5-6x leverage, suddenly based on an hourly chart just pulled down 16 grand. Again, why does this person need to care anything about a weekly chart or a monthly chart? The answer is they don't, right? They don't, point blank. And even if this person, let's just say this person was doing a $100,000 trade fund and they were like, hey, you know what? I only want to risk 1% per trade, right? So they're risking $1,000. Well, suddenly this becomes, a third of whatever this is. We'll just call it, 16, 17 Bitcoin, right? You get the idea. And this drops from 547,000 down to around 180,000, which is going to be a little easier to do because there's going to be less slippage and things like that. But this profit is still going to be over $5,000, even if this person is only risking 1% of their trade fund. $5,000 profit. Most people in the world can live a full 30 days, all bills paid, on $5,000. Where I'm at in the world, I can live pretty good on $5,000 a month. I ain't gonna drive in a Lamborghini, right? But all my bills are easily paid on $5,000 a month. The best paying job I ever had paid about $6,000 a month, and that was before taxes. I wanted to point this out because people get so caught up about, where is Bitcoin going and what's Bitcoin doing, and who cares? At the end of the day, who cares? Now, full disclosure, I shorted over here. I was asleep when this happened, so I did not get this long. And then I shorted over when I woke up. I slept in today, and I shorted the close of this 15-minute candle right there, right? Nearly got stopped out. Okay, on Coinbase, it looks like I would have got stopped out, but on Bybit, it didn't eclipse this old high back here. And then I put a trailing stop on it, and it got hit a few minutes ago. It looks like, hang on, I'll tell you. So my entry was 10.889, and I got stopped out at 10.868. So again, tiny little profit. Certainly not going to write home about that, but it adds up. All those little nickel and dimes add up. Okay, so let's jump away from the trading tutorial. Let's talk about charts and kind of what I am seeing. And again, remember, this is just an analysis, right? It doesn't necessarily mean it's a trade plan. They're totally different things. So first things first, we waited, or hopefully everybody waited and didn't get caught off sides. We waited and waited and waited and waited and waited, right? The last 30 days or so for this 50-day moving average to get tested. Talked about it, and talked about it. Well, watch this. This move up lasted about 36 days. There's 36 days of distribution. Then we had this dump, and we've moved sideways for 36 days. Here we have just tested that 50 moving average. It's sitting at 10,874. Price is at 10,886, so just slightly above it. That is all pretty cliche bearish behavior. I know people are bullish, whatever, right? I'm not. It's bearish behavior. It's nothing else to me. I think that the powers that be, if you will, saw that Square news and knew that people would FOMO in, and they're playing people, right? You have this downward sloping trend line, has not been broke, hasn't even been touched, right? Happens to be crossing right around 11,000 or so right now with this horizontal level of resistance. So there's that. There's another downward sloping line drawn from close to close. Looks like that. Looks like it might have been tested today. So I will keep an eye on both of those. If we start taking those out, I think the next level to watch is going to be 11.3, which is going to be right around this level here, right? If we start moving up, that would be a level that I would keep an eye on. I'll take the 50 moving average off for a second so I can draw some fibs. You have a golden pocket sitting right up here around 11.4, 11.5. So that could be a short opportunity if we move up. It also happens to line up nicely with this area here. So there's that level. These are levels that I'm watching, right? If we draw our Fibonacci levels from here to here, then we've got a golden pocket up around 11.2 all the way up to about 11.3, which again lines up beautifully with this level of resistance, right? So there's that. And it also could end up forming some type of, end up looking like this, where you end up getting a rising wedge that could end up forming up. So, all of this stuff still looks bearish, guys. It does not look bullish. Oh, great. Bitcoin pumped $300. And that's the funny thing. If you really look at this market, people are as excited about a $300 move up as they normally were about a $500 or $1,000 move up. They're so desperate right now, that the market as a whole, that even a $300 move is suddenly big news, right? Is it really big news? Because, if you really stop and think about it, this is a pretty normal move in crypto. This is not some completely crazy move, right? But people are so desperate that they're clinging onto this dear hope that it's going to keep pumping. I went to Twitter and it was like instantly people were talking about 11.7. And I'm not saying that it can't get there, because that is an interesting level up there, right? Up around this area here. But I mean, let's be real. There's a whole lot of levels between where we're at and way the hell up there, okay? So that's kind of what I'm seeing on the daily chart. If we put RSI on there, this is pretty interesting, right? Now this would be more bullish. I'll pull this back out of the way here. This was a triangle, and it does look like it broke north of it, right, on RSI, but I don't trade these triangles in RSI. They're more things that I use to kind of stay out of trades. So for example, if I was trying to take a swing short, this would be enough to make me say, I think I'll pump the brakes. I think I'll wait on that, right? If we draw this down, it was broke really back here, right? Came down, kind of bullish retest it, and then moved up off of it. So there certainly could be more upside, but I look at it as bearish upside, meaning I look at it as, short the bounces, short the rallies, that type of thing. I do view this as a downtrend. Okay, if we put this on a 3-day chart, okay, so this is a 3-day candle that we're in, that it closes today. So this is going to be interesting, right? This is kind of the bear market box, and if you look, it keeps bouncing off of this support, this upward sloping support, and it really is testing the top of this box. And this looks a lot like an ascending triangle, right? Which of course is bullish, so keep that in mind. But this looks like an ascending triangle. If it is, it might break north, right? And I'm going to show you something. I guess I'll show you now. I was going to show you at the end of the video, but it makes sense to show you now. There is a scenario where I'm just dead wrong, and this is really the beginning of the next bull market. I put this on Twitter the other day, so let me pull it up there. Okay, so this is the scenario, and this is from 2 days ago. This is the scenario where if I'm dead wrong, this might be what we're actually looking at. So over on the left-hand side, this is our current price action, or it was current as of 2 days ago, right? Had this consolidation pattern after this move down. It basically bounced right around 45 RSI or so, right? You look over on the right-hand side, this is actually February of 2016, right before the last major bull market really took off. And it had moved down out of this overbought territory, and it had put in the same type of consolidation pattern right around that same ballpark in RSI. And if you look at the price action, look here, right? Not exact, but fairly similar price action done at this point. So, what just happened today might be this candle right here, right? It might be the start of this move up. So if I'm completely dead wrong, this might be what we're looking at. This might be the kickoff to the next bull market, where this thing does start its journey from 10 or 11K all the way up to the next all-time high. That's completely possible. Now that being said, keep in mind that if it plays out exactly like last time, it did pump after this consolidation, and then it came right back down and retested it before it finally moved. So even then, people had an opportunity to get into the market. They weren't just left standing on the sidelines, okay? So that's kind of what I'm watching on the daily. That's what I'm watching on the 3-day. I think this candle is really interesting. I do want to see where it closes at. If it's suddenly pumped up, broke outside of this bear market box, I would certainly pump the brakes pretty hard on being a bear, and just kind of wait and see what happens. But for right now, when you're in a downtrend, as the saying goes, the trend is your friend. On a weekly chart, let's pull up a weekly chart real quick. All right, so here's our weekly chart. Obviously, we bounced off the top of the bear market box on the weekly. That was about a month ago. We've been consolidating sideways ever since. There's not a whole lot to really talk about on RSI. As far as price goes, we're still sitting right above that 19-week moving average. Little sketchy that we keep testing it. We've tested it 3 times in the last month. So obviously, if we did move back down, I would look for it to break and us to go down further, down to at least 9K, probably closer to 8,500, and then kind of reevaluate from there. There's not a whole lot to talk about on price. It's kind of the same thing as the 3-day and the daily. If it does break north, I'd start watching those levels that I just called out on the daily chart. The 200-week moving average on the weekly is down around 6,800 right now. Lines up pretty nicely with these old lows back here, and it lines up pretty nicely with some Fibonacci levels if you draw the fibs on there, right? Down right around the golden pocket. So if this thing does collapse down there, Could be some interesting long opportunities down there, but you know, it's $3,000 or $4,000 away, so not really losing sleep worrying about that right now. Is there anything else I want to talk about on Bitcoin? Yeah, real quickly, let's talk about this. Okay, so you know, we still have these gaps down here. These gaps love to fill. Talked about this time and time again, right? This one's down around 7,800. This one's down around 5,400 or so. So I expect both of those probably will fill, but there's no guarantee. Nothing is ever guaranteed in trading. We look at the CME chart. CME loves to pull this game, right? They have these big gaps sitting here. They'll often come down right to the edge of it, trap bears who are getting over eager, you know, thinking, oh, I'm going to play the gap, and then they pump right back up off of it. They've done this over and over the last year and a half or so, right? Did the same thing last year right here, kept coming down to it, you know, kept trapping bears and then pumping up off of it, finally filled it in. Back here we had a bull gap. That one is filled in nicely. They didn't do any fake out on it, and you know, this is, you know, the last daily gap that I'm aware of. There might be some gaps on the smaller time frames that, you know, I'm not aware of. I know there's one 4-hour gap down around like 3,400 on the CME, but I'm not really watching it right now. This looks like a bear flag to me. Yeah, so that would be a bear pennant, I guess, and it actually looks more like a pennant now than it did a few days ago. So probably not a bear flag, but regardless, the end result is the same, right? You get the flagpole, you get the pennant, and then you get the break south. And if you draw this thing up with a trend extension, it depends on where you draw it from. If you're measuring this move as your flagpole, it gives you a target down around 9K. And if you're measuring the entire move, then you can go from the top here to the bottom. Here's the pullback, and it gives you a target down around 8,700, which lines up pretty nicely back through here. Okay, so still a bear until proven otherwise, and not because, you know, I'm a perma bear. I know people think, oh, this dude is always bearish. I'm just trading the trend. That's all I'm doing, right? You got a down move, you got consolidation. More often than not, it's going to continue in the same direction. And the reason I'm macro bearish is because when you zoom out, we are in a downtrend. We have been in a downtrend, right? Is this putting in higher highs? No, it's putting in lower highs, right? This is the CME chart here. This is where the CME first came into crypto back in December of 2017. Here's your high. In the summer of 2019, here's your high. And so far in 2020, here's your high. Lower highs is a downtrend. And I view this as one macro downtrend. In fact, if you guys really want to see the big picture here, we're not going to talk about this chart today because I talked about it in a video a few weeks ago. But it's entirely possible, and I think I talked about this in past videos, but it's entirely possible that this thing is really just in a range, right? Maybe it's not even a trend at all. Maybe it's just ranging sideways. In fact, the BLX chart is wrong. It's cleaner channel than that on Coinbase. I shouldn't say it's wrong, it's different, right? So here's your close, right? If you go directly sideways in this thing, look at this. I mean, it looks like a channel. It just looks like it's ranging sideways. So the problem you have, the reason this is bad news, I know people are going to be like, okay, well, is that good or bad? It's bad. It's really bad if you're a bull. Because when you look at this, it just looks like a giant channel. But if you put it on a log chart, guess what? What is a sideways ranging market that comes after a huge move up? If this was an hourly chart or a daily chart, anybody that looked at this would say, here's your move up, here's your distribution, and what comes after distribution is your move down. That's the reason that's a problem. That's the reason that's not good. You do not want a sideways ranging market after a huge move up. You want a sideways ranging market after a move down, because then it's accumulation. Just something to think about. All right. So with all that being said, I think I'll go ahead and wrap the video up there. Major takeaways: macro movements are fun to talk about. They're fun to, you know, pull out the crystal ball and make predictions on. But at the end of the day, if you really want to make money trading, you can do it on the smaller time frames, and you're way less susceptible to all these outside events. You can get in and get out. Over 90% of my trades last than 4 hours. All right. So this is James with Crypto Common Sense, reminding you that I am indeed just some guy sitting in a spare bedroom. Nothing in the video is financial advice. Nothing in the video is trade advice. You should always do your own due diligence and seek out professional investment advice from a licensed financial advisor before making any type of investment in cryptocurrency, stock market, or precious metals. If you enjoyed this video, please be sure and give it a thumbs up and subscribe to the channel. Please leave me a comment, and if you haven't already, make sure you join the Patreon. There's only about 50 or 60 people in there, so I'd like to get that up to a couple hundred people so that I can do even more videos, and eventually, if we get enough people, I can start posting a lot of alt charts and things like that. For those of you that are bullish, we can start putting up some alt pairs and do a lot more chart analysis. Right now, this stuff makes less than a month than one trade does for me. So it's really hard to justify putting more time in, but I would like to grow it. I would like to get to, eventually even 500 or 1,000 Patrons where I could put a few hours a day into it. All right. So this is James with Crypto Common Sense reminding you to please trade safe.